If you're retiring to Portugal on a foreign pension, you've probably heard it's a paradise for retirees. That was the old story. Today the rules are different, and most of what's online is out of date. Here's how Portugal actually taxes a foreign pension by the law, not the brochure. Start with the trigger. Once Portugal is your home, more than 183 days in a 12-month window, or a home you keep as your habitual residence, you're a Portuguese tax resident. And a tax resident is taxed on worldwide income. Your foreign pension is now inside Portugal's tax net, wherever it's paid from. In Portuguese law, a pension is Category H income, retirement, old age and survivor pensions, annuities and the like. A pension paid from abroad still counts. It's added to your other income and taxed under the general rules. There is no automatic exemption just because the money comes from another country. But isn't there a special 10% pension deal? There was under the old non-habitual resident regime. That regime is closed to new residents. Its successor, the IFICI, only covers employment and self-employment from eligible activities. It does not cover pensions. So a retiree arriving today gets no special pension rate. That means your foreign pension is generally taxed at Portugal's normal progressive income tax rates, the same table that applies to a resident's other income. There is a specific deduction for pension income, but the headline is simple: plan for ordinary rates, not a flat holiday rate. Now the part that saves you money, double taxation. If your pension was already taxed at source, Portugal gives a credit. It deducts the lower of the foreign tax you paid or the Portuguese tax on that income. And the tax treaty between Portugal and your country decides who gets to tax the pension first. Private and government pensions are often treated differently. So practically, check the specific treaty for your country. It's decisive. Get a Portuguese tax residency certificate to claim relief. Declare the pension in your Portuguese return and claim the credit actively, because unclaimed relief is simply lost. And keep the paperwork, which pension, taxed where and how much. So as a resident, your foreign pension is Category H income, taxed at normal progressive rates, no special pension regime for new arrivals, softened only by the double taxation credit and your country's treaty. That's the foreign pension by the rules. Subscribe to Portugal Life Compass. Next, how double taxation treaties actually work.